Welcome back to Market Day Report. I'm Scott Shelly, otherwise known as the Cow Guy. That's the black and white jacket. You can catch me at Twitter. That's the best place. That's at Scott the Cow Guy. That should be easy enough. Come on by, take a look, drop a line, see what's happening. But I appreciate all the comments, both good and bad, from everybody, because we're here for you, and we want to make sure that you're being served properly. Okay. Speaking of served properly, let's take a look at how these markets have opened up here this morning on the 11th of October, Columbus Day. Happy Columbus Day. D's corn off a penny, 5.29.5 is last. March corn off 3/4 cent at 5.38 3/4. Okay, that's kind of quiet. Not a lot happening there. Beans are rolling over just a tad. We've got a 3.5 cent loss in November, 12.39.5, while Jan's off 3.25 cents at 12.51 even. How about Chicago wheat? What's happening in Chicago wheat? Here we go. Bucking the trend a little bit. December's up a penny and 3/4, 7.35 3/4, while March is up a penny and a half at 7.48 3/4. How about Kansas City? Let's take a quick trip to Kansas City. This one is really mixed and really quiet. We've got D's up a tick at 7.37 3/4. That's a 1/4 cent higher, while March is off a 1/4 cent at 7.45.5. Not a lot happening there. How about spring wheat? Spring wheat in Minneapolis, and this is indicative of a holiday. The banks are closed. I know that there will be some traders around, or maybe even a lot of traders around, but it is going to be a quiet one. We've got December spring wheat sharply unchanged at 9.46.5. March behind it down 3/4 penny at 9.35 even. And let's take a look at what's happening in cotton. This is cotton markets off at 156 points at 109.04. Okay. That brings me to Dewey Strickler from Ag Watch Market Advisors. Dewey, thanks for coming on. Happy Monday morning to you. There was a lot of numbers. It's an odd one today. I said this on the last segment. We've got kind of a holiday, right? It's not a massive holiday, but we have a holiday before a USDA report tomorrow, so could be kind of dicey, if you know what I mean.
Yeah, it could. I'm glad you reminded me it was Columbus Day because I'd completely forgotten. Not that I've paid much attention anyway, but yeah, we got some numbers coming out tomorrow. Normally, there's not any surprises. None are expected in tomorrow's report, but I wouldn't rule it out. I think if there is a surprise, it could possibly be in soybeans with the yield there. The bears are looking for yields to be bumped up, and maybe they will, but if they're not, you got these markets at a terribly oversold level, and you could get a fairly decent recovery.
Yeah, that's the dangerous part is I agree with you, because you want to beat these markets up, that's fine. You think the yields are going to get bigger, okay, I get it. But at some point in time, your risk-reward starts to not pay off. You want to get short D's corn below $5 and beans below $12. I mean, you're going to really need to see a really bearish report to bring new sellers to the market. And I think what goes overlooked a lot about these markets at Dewey is the fact that, yeah, we could get some bearish numbers tomorrow, but it has to be bearish enough to bring new sellers to market. And if it doesn't, that's when you sometimes see bearish markets squeeze and up higher in the day. You know what I mean?
Well, if you noticed in the Commitment of Traders report, traders are flat soybeans right now, so they could go either way with that. But as I said, we are terribly oversold in the soybean market.
Yeah, and we'll probably, time will tell. But again, with today being a holiday and then tomorrow being the report day, it'll just be interesting to see how this market shapes up going into it. And maybe we'll talk about this after livestock in the next segment. But, there's other things that are out there kind of weighing on people's minds. And if you've taken a look at the energy markets here this morning, or at least filled your car up with gas over the weekend, you know what I'm talking about. But there's a lot happening over there as far as inflation goes too. So we'll touch on that when we come back. So don't go anywhere. Dewey, thanks for being on. We're going to go away. We're going to pay some bills. We're going to come back and talk livestock with Dewey Strickler after these messages. Welcome back to Market Day Report. I'm Scott Sheldy, otherwise known as the Cow Guy. Let's jump in. The Cow Guy likes to talk about live cattle. Let's bring up that table, see what your markets are doing, because ultimately it's your money, right? I mean, that's the most important thing about things here. We've got that D's contract off 22 cents at 130.02. Really kind of still quiet here. You can tell by the change in day. How about feeders? They're still quiet as well. A little bit of a mixed board. You have to go out to the deferreds to see higher prices, but November's off 32 cents at 160.82, while Jan's off 20 cents at 160.92. But you go out to say April, and you've got a 22-cent gain there. How about lean hogs? What's happening there? There's more losses here. December's off $1.92 at 79.57, while February's off $1.67 at 82.20. All right, let's bring back in Dewey Strickler from AgWatch Market Advisors. Dewey, what do you think about the livestock market? And if you don't want to talk about that, the floor is yours. You can say whatever you want.
Well, I think that what you got going on in the livestock market is mostly a technical trade here right now. I could see cattle maybe trying to work up a little bit higher, get the D's contract up to about 132. As far as the hogs are concerned, you got some gap areas down around this 79, 75 area, and hogs that may offer a little support. We may go down and fill the gap.
I don't know how much you look at other outside factors to these markets, but you probably have seen what's been happening in, say, crude oil here this morning and what nat gas has been doing over the last few weeks and even months for that matter. Your general overall view of the U.S. economy and how that could affect demand, I mean, where do you think we are as far as that reopening trade, and how healthy do you think things are, generally speaking?
Well, I don't think things are as healthy as what we are being told. One thing that I look at are rail car loadings, and they are above last year, but last year we had a horrible year. And I've noticed where the rail car loadings have peaked out and they started to decline a little bit. That concerns me. I think as far as like the stock market is concerned, I think we could see higher values. We could see the S&P and also the Dow go up and make new highs. But then here again, too, once these new highs are made, I see the S&P dropping about 2,000 points and maybe about 16,000 on the Dow. So I don't think things are as good as what we're being led to believe.
You know, I'm going to ring the bell. I agree with you. You get a blue ribbon for that, because I think exactly the same. I do think that the supply chain issues, while they're not all the U.S., there are problems here. It's all over the globe. That's been really slowing things down. And then you've got all this money out there that's going after too few things that we've got here. That's causing this inflation. And inflation, I used to think it was transitory, Dewey, but you know what? I've had to give up the ghost on that. It looks like it's here to stay, and that's going to be a problem too. So whether it's in energy, whether it's in food, whether it's in Christmas presents waiting off ports all over the country, we've got a problem on our hands. And I think you're right. It's not as good as they're trying to tell us it is. And then I think, you know, with the jobs number we got on Friday, which was horrible. And the last thing I'll say is this: we've got 11 million open jobs and 9 million people looking for a job, and we can't put those two things together. It doesn't make sense to me. So if that's the case, I think we're in a little bit of a trouble here. So we'll leave it on that one. But I really appreciate your input. That's Dewey Strickler from AgWatch Market Advisors. Thank you very much. And I'm going to punt this one back over to Tammy.